Good morning. Let's talk about Spotify. For years, the undisputed king of music streaming. It transformed how we listen to music, built a global empire on playlists and podcasts. But the landscape is shifting. We're seeing intense competition from Apple, Amazon, and Google, companies with deep pockets. Spotify doesn't have that luxury. Music and audio are its entire business. The context for this latest report, coming after Q2 2025, is particularly charged. Investors have been laser-focused on one thing: profitability. For over a decade, the narrative was all about growth, but now the market's patience has worn thin. Spotify reported 645 million monthly active users for Q2 2025, with 248 million premium subscribers. This beat analyst expectations, suggesting recent price increases didn't trigger a mass exodus. Total revenue came in at 3.8 billion euros, driven by subscriber growth and higher prices. Most importantly, Spotify posted net income of 150 million euros, another quarter of positive earnings. The gross margin expanded to 28.5%, a direct result of cost controls and favorable licensing deals. Daniel Ek's promise to move from investment mode to profit mode now has tangible proof. One of the biggest announcements was audiobook expansion, now integrated into Premium in 10 new markets. This is a direct challenge to Amazon's Audible, betting on converting its massive user base into audiobook listeners. Spotify announced Music Pro, launching globally later this year with lossless audio and advanced mixing tools. This is a classic upsell strategy, getting dedicated users to pay more, boosting ARPU. The company expanded its AI-powered DJ feature and improved podcast discovery using artificial intelligence. Spotify is shifting from expensive exclusive deals to building a scalable advertising network across thousands of shows. Wall Street's initial reaction has been broadly positive. Morgan Stanley raised their price target, citing improving margins and a clear path to sustained profitability. The stock jumped in early trading, but analysts want proof that profitability is durable. The narrative has shifted from if to how profitable Spotify can be. With over 645 million users, Spotify has massive scale. The opportunity lies in monetizing this audience more effectively. If Spotify captures even a small fraction of the global audiobook market, it could add billions in high-margin revenue. The biggest risk remains competition. Apple, Amazon, and Google can bundle services and spend unlimited resources. Spotify's dependency on music labels remains a risk. They'll demand larger revenue shares as contracts renew. What's the final verdict for investors looking at Spotify today? Spotify has proven it can be profitable and demonstrated pricing power without alienating users. The company is no longer just a digital jukebox. It's building a comprehensive audio platform. This expanded vision presents a much larger addressable market and more compelling investment thesis. For long-term investors, Spotify looks more attractive than it has in years. If ARPU continues climbing and new initiatives gain traction, Spotify has a clear runway for sustained growth.